Welcome to Markets Now. I'm Michelle Rook, along with DuWayne Bosse with Bolt Marketing. We ended mixed in the livestock futures, a down day in cattle, higher in hogs, and then over in the grain, steady to a little bit better in row crops, kind of mixed in the wheat. So let's start off with the row crop sector. First off, DuWayne. So we had a nice pop on Monday night here, and certainly still in a weather rally, but it looked like we came well off of our highs here when we got above $6 on D's corn, above $13.50 on November beans. So did we get some profit taking, or were farmers ready to sell up there?
I think a little bit of profit taking if you bought last week. It's not like the forecast got even hotter and drier. It was hot and dry forecast last week. That's why we rallied so much last week, Michelle.
Yeah.
So I don't think we had the forecast that really said that we got to go above and beyond what we did last week. And yeah, producers really do need to be selling this new crop up here. And you probably do see some of that anyway. So a little bit of everything. I know I'm surprised. I thought for sure after a holiday weekend, we would come back and see fireworks and I was going to be crazy busy. And it really wasn't today. It was rather quiet trade.
Okay. And why do you think that is? Do farmers think that maybe they're not going to get a crop, so they're waiting to price, or do they just think it's going to continue to go higher here, or what?
I think, well, producers are always bullish. I can say that since I'm a producer as well.
Right.
You either haven't got the rain yourself and you're worried about selling crop, or you're looking for the right weatherman who shows that Illinois is super dry and you're saying, oh, they're really hurting there. I don't know how much they're hurting. They've gotten some spotty showers every once in a while. So the crop is probably just hanging on. But even I got to admit, knowing what we know about production, boy, it needs to rain pretty darn soon. We are setting ear girth and ear size right now. So I think we are hurting yield. I think there's no doubt about that. But that's why producers don't sell hard. They're always thinking it could be a little bit higher tomorrow, probably.
So if we do have crop condition ratings lower in this afternoon's report, will we shoot back up over those marks on the charts that I talked about?
I think if you combine a bullish crop conditions report with another continued hot, dry forecast, pushing that rain, further out, that day 10 to day 16 in the European and GFS models, I think you will be up tomorrow fairly good. I think crop conditions could be down pretty hard in my home state of South Dakota and North Dakota as well. And then Illinois. So you get a key state like Illinois dropping crop conditions again, then people might buy it on the overnight and push it tomorrow a little bit more. Got some key resistance points, getting over $6 for D's corn, $13.50 for Nov beans. There's probably some sell targets sitting up above there. And remember, back to the whole poor demand thing. I mean, even if you lower the crop size in the U.S., I think demand just gets lower too from USDA eventually.
Yeah. And we talked about profit taking and farmers selling. Heck, a month ago, we were so bearish and we scored those lows, and we've rallied like, $1.25 on corn and over $2 on soybeans from those lows, haven't we?
Yeah, I was all smiles Thursday and Friday last week because I was one of the brokers that was bullish all winter and all spring, thinking we're going to have a spring rally. And boy, that just didn't happen. So this one kind of got me out from under the beating stick or whatever you want to call it. I got kind of lucky. So I was happy to sell this rally. And, it's a weather scare rally. It's a supply driven rally. So I do think it needs to be sold. Now, could we have 2012 all over again? I guess so. But to me, that's a very different year where demand was still growing at that point in time, where we started last week's rally as the most expensive corn in the nation. And then we rallied what we did. Brazil's corn prices going the opposite direction. So this isn't going to generate any more export demand, this rally, Michelle.
That's right. This is a supply-driven rally right now. Those don't usually last very long, do they?
No, and I don't think this one will either. I mean, I was worried after the 3-day weekend, if we had a wet forecast, we'd come in Monday night and possibly trade limit down. Now, of course, that wasn't the forecast and that wasn't the case in the market, but don't be shocked if eventually we see that. We got through one holiday. Now we'll get through the end of the month, and then it'll be July 4th before you know it. And there's another key holiday day there where you come back. And if the forecast is wet for Illinois, then the market won't wait for it to rain. More than likely, it'll just tank right then and there.
What do you think the fund community does here? They've covered their shorts. It looks like they've gone long in the corn market, and they're already long in beans and getting longer. So how much will they push this?
That's a $1 million question there. And, they're the ones that could make me look foolish, right? I'm sitting here selling, saying this needs to be sold. They've barely started to buy. Like you said, they were short corn not too long ago, and they're long maybe 40, 50,000 contracts now. They could go long 300,000 if they think this drought is a big deal. But we have to remember, just because they're the funds doesn't mean they trade the markets correctly either. In fact, they don't have the best trading record. So they could go either direction yet. They could turn me into a loser here. But remember, even in 2012, when we had that severe drought, we dropped prices pretty hard by fall. And that's what weather scares do. And eventually this one does as well. So, make as many sales as you can, maybe protect them with some call options, which, that ship has maybe sailed a little too, because they're a lot more expensive than they were just a week ago.
So we did see a mixed day in the wheat market. Chicago wheat higher, Kansas City lower. Are we unwinding spreads between those two? Or are you seeing a little harvest pressure in KC wheat or what?
I think you're unwinding some of the spreads. And I think you got a market that's kind of just bored right now. The bullish side of that story for wheat is always the Russia-Ukraine war, right? And I saw some articles last night about Ukraine production down, I don't know if it was 10 or 15%. I forget the number off the top of my head, but I remember thinking like that number isn't big enough, because USDA in the last monthly supply and demand report had Russia's wheat crop higher, Australia higher, Europe higher. You could just go down the list, and everyone else is higher to make up the decreases out of Ukraine. So that market's just kind of bored and tired and a follower. We did rally late last week in wheat, but I think that was just following corn and soybeans higher. Market that probably is going to struggle here. Now, on the spring wheat side of things, Michelle, I can tell you production-wise, spring wheat does not like heat. It's 95 and windy in the northern plains today. That the spring wheat crop does not look good. Crop conditions are probably going to deteriorate a lot this afternoon, but I don't think the market will care, though.
Okay, but if you combine the crop conditions with maybe some lower acreage, could that also maybe make this a pretty explosive scenario here at the end of the month? Or what are you thinking about acreage?
It sure could, yeah. If you can take the acres down, if we continue to stay hot and dry in Canada and in North Dakota, with the funds being hard short the wheat market, you sure could have an explosion higher. And I hope that's what happens, because that would maybe help the corn market out a little bit more. But I think you and I both know, you get north of $9, you're going to see a lot of hedge pressure there too. Absolutely. From producers. So yeah, you could get that rally, but it'll be sold pretty hard too.
What about acreage in general at the end of the month? Do you see us losing acres in corn, soybeans, and in wheat? And what do we do in terms of, we're not trading a 181.5 and a 52 bushel yield on corn and beans anymore.
No, the USDA will probably be slow to play to drop the yields down, and that's completely fine. I kind of do the same thing too. But yeah, we're south of 180 now, and we're probably around that 50 to 51 in the beans yet, though. On the acreage side of things, I have one that I never understood how they came up with so many acres this year anyway. I think the principal crop acres are too high. Now, earlier in the winter, when I was under 18 feet of snow, I thought we were going to have a lot of prevent plant. Now, the weather did a complete 180 and flipped, and we were able to get most of it planted, but there's still prevent plant in Northeast South Dakota, North Dakota. So yeah, I guess I'm going to just go out and say that I just think acres are just lower than what USDA is forecasting earlier. And say what I want if it's urban sprawl expansion that way, but I don't see how we can find that many acres. We'll see.
So if we see lower yield and lower production and lower acres, does USDA come in and lower demand on the flip side in the July WASDE then?
Bingo, Michelle. Yeah, as you're asking that question, I started to laugh because I was like, that sounds very bullish. Why are you so bearish, DuWayne? And it's exactly what you mentioned at the end there, Michelle. It's because I think they just offset with less demand, at least in the corn market. Soybeans could still have some fireworks. I feel like we're still fairly tight. I mean, we got Europe in buying our old crop beans now to crush them for oil. That's kind of a whole different story. But when it comes to corn, it's a bearish situation there where, sure, we can drop the yield, we can drop the acres, and all of a sudden supply sounds tight, right? And then they're just going to offset that and export demand because we weren't competitive before this rally. So higher prices aren't going to help us.
Cattle market at a tough down day. Do you think we took out some pretty key support, and will we keep going down?
Yes and yes. I think we keep going down, a little bit depressed there, but we had a nice run. There's a case of a market topping when the news was the most bullish. We had that key reversal back in the early part of June. Technically started to look negative from there. Lower cash last week. Today we closed below the 20-day moving average for August live cattle. That was kind of a key point for me. I thought for sure we would hold that today and then maybe rally tomorrow. And remember, now we got the funds long the cattle market, and I believe a record long the feeder market. So if they are deciding that it's time to take profits and the chart doesn't look good, which the chart doesn't look good, if it looks like a top, they'll take their money and run. And that can be a pretty significant pullback in the cattle market. Now, numbers are still tight. I don't want to make it sound like a complete bear there. I'm afraid we may have seen the high, though.
In both futures and cash?
Yeah, I'm afraid so. I think the cash market steadied a little bit lower this week. That cash market's a little hard to figure out, though. 2 weeks ago, packers were buying cattle and just were picking them up within an hour or two after they had bought them. So it seemed like they had trucks already en route. So they were just desperate for the cattle, would kill anything, cows, whatever, didn't matter. And then last week, there was this talk of, well, they're bought up for the next 4 weeks. And I was shrugging my shoulders. How the heck did that happen? I kind of think packers were bluffing a little bit here, but if they can get the futures market to crash this week and lower cash, their bluff tactic may have worked.
Gap higher opening in the hogs again today. And what do you think? Does that market keep going here? Have the fundamentals really gotten that bullish in this much of a hurry, or?
Not really. The fundamentals are chasing. They're starting to get a little bit friendly. You're seeing the index going higher, weights down a little bit. And actually, that's usually what happens in the hog market. The futures go, and then the fundamentals will follow suit. To me, this seems way too high and way overdone, but when I get confused on a market, Michelle, I like to just watch the trade action. This trade action in the hog market screams bullish. I mean, we open higher, we trade right there. We hardly ever pull back just enough to fill a gap and then finish near the highs. I don't know what's going on here in this hog market, but it looks very strong to me. So I'm going to say let her go for now, but I'm not going to get in front of it, though.
Yeah, and the funds have covered a lot of that massive short position they had. So we'll see how much more gas we got in the tank, I guess.
Yeah, exactly. Good point.
Okay, thanks so much for joining us. DuWayne Bosse with Bolt Marketing. That's Markets Now.